Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today I will take a look at the Canadian dollar because first of all we haven't talked on the Canadian for a long period already, and second because as we have promised this in our video updates that we will dedicate the weekly research to the loonie because our major patrons, our major currencies that we usually talk about, the euro currency and some others, currently hasn't shown any significant action, and it's not really big sense to talk about it again. That's why it's better to take it something new that we haven't monitored for a long period. And the Canadian is absolutely perfect for this purpose, because not because we haven't talked about it for a long time, but because it's right now stands at a very significant area. And in general, guys, as we know, the Canadian dollar stands in tight relation with the crude oil. And crude oil is right now is number one commodity on the markets, because it shows just tremendous plunge down, and everybody knows that this is not just market normal behavior. That's not the market tools that is driving the crude oil market, but this is artificial drop that mostly stands in the geopolitical tensions in relation to the geopolicy. That's why analysts make very careful and cautious forecasts on how deep the crude oil could fall, whether it would it will fall further or not, because as you know, to forecast the geopolitical impact on the financial markets, it's really difficult, if not impossible. But still, taking into consideration some technical issues, we could make some analysis, and this might be really interesting. If you are watching for crude oil market, and if you monitor this market, you should know that crude oil has reached the significant monthly target around the $60. So I will show you the crude oil monthly chart. Here it is, and we have this huge ABC top 1618 extension right at the 60% and the strong monthly hours sold. Currently, the pressure on the crude oil is a bit become easier, and that is confirmed by the recent data on the storages in the United States. Although they were really shown really positive surprise that storages have increased, and another time market probably will react by significant drop on this data. But in recent time, market just has swallowed it and stands at the same area. That tells us that market right now stands at support, and if the artificial and the external pressure on the crude oil prices will become easier or will be eliminated, this market probably hardly will continue to move down, or at least will show some significant retracement here. Anyway, as market has hit this target around $60 per barrel, so it still stands here, and technical market at support. So that will impact on the Canadian dollar as well. And although we have on the monthly chart of the Canadian the same target that market hasn't quite reached, but at the same time on the weekly chart we have the level that also seems as the strong resistance. So that's why in today's daily update we will also include the weekly chart of the Canadian dollar, because in fact it contains the major part of the analysis. So we take a look at the weekly chart of the Canadian. You'll see that market has completed the butterfly sell pattern. It's 1618 butterfly sell right at the major fib resistance 1665, and take a look. it has completed ultimate target of this A, B, C bottom, 1618 extension. What I would like to say here is that we do not argue that market probably will continue move higher to the major monthly target that in fact mirror the target on the crude oil, but the crude oil already has hit it while Canadian is not yet. It stands approximately at 119 and a half, so 250 pips higher than currently market stand. But we also suggest that some retracement here is possible, and this retracement absolutely will not prevent and will not cancel the perspective of the possible hitting of this major target on the monthly chart. For example, it could become an action like here. So if we take a look at another weekly chart, you could see that here is our butterfly. So market could show the retracement and then continue move to this target. Here's, by the way, this target, 618. So market could take the shape of some reversal pattern, and later Canadian could reverse down with a deep retracement. But this reversal pattern also could suggest a further continuation to the upside. For example, as the 3 drive sell. That's just an assumption. That's just one of the possible scenarios that I'm showing you just to understand my major thought. That the major thought is that if even retracement will happen here, it doesn't mean that here we will get a reversal and market will not touch this target. But we do not see any contradiction between the possible retracement here and further continuation to the major target a bit later. Because the scale of this pattern, so we take a look at the time that was spent on the completing of this butterfly, in general, even on this move from this ABCD pattern, right? And on the scale of this target, that's really much longer and bigger than this one. That's why this retracement could be just a part of this upside action. But this retracement in the same time is really valuable for us, because this is in fact 6 point down to the 110 area. So this will be not really small move. As we mostly trade on the daily chart, on the intraday charts, the weekly retracement or minor retracement on the monthly chart is really valuable action for us. That's why the core of our analysis on common week on the nearest time will be this setup. Since market right now stands at a strong resistance area. That's not just 618 resistance. This is agreement, weekly agreement that has been confirmed by the reversal butterfly. That's also take a look weekly overbought. And this is really a solid barrier for the short time perspective, and market really could continue move lower and show the retracement down. But the depth of this retracement could be different. Maybe this will be just as here to 110 area, or maybe it will be smaller, but some reaction should follow here on this very important moment. Market has hit significant resistance. So on the daily chart, we see another picture. So we can see that upside action takes the shape of the channel, and then the final part of this channel, market has created another butterfly. The smaller butterfly, 1618, has been hit. The daily overbought also has been hit. But here you can see that market doesn't show any significant action to the downside. Take a look that after the hitting of this area, market has formed a high wave pattern that mostly indicates the indecision. So what to do next? And all recent action stands inside the range of this pattern. And that just tells that market still stands in decision, even despite on the fact that market has formed here the bullish grabber, this small candle. Okay, mostly probably this stands in relation to the Christmas holidays, because that just becomes the thin and lazy market when more major investors has stopped their activity on the markets and turned to the celebrating of the holidays. But and maybe we will see some clarification on the common week. But here, market also has completed these patterns, and it really could show the reaction in the retracement really could start, because major target has been completed. It has been confirmed by 2 reversal patterns on the daily time frame chart, on the weekly chart. On the 4-hour time frame chart, we have triangle pattern that's forming. Theoretically, it also has the chance to shift to the butterfly, okay, because it has the shape of the half of the butterfly. In this case, it could continue move to the 1618 to the 1714 area. But guys, to be honest, I do not see any solid reasons for that, because major target on the weekly time frame chart already has been hit, and market in fact has no reasons. It has no targets that really could work as the magnet for the current market that could where market could gravitate to. This usually could happen, some upside continuation, if, for example, market would have some untouched target here, slightly higher. In this case, yes, we could say the butterfly is more probable. But right now, market doesn't have such targets. And in this case, we can't exclude the situation where we could get the surprise on the Canadian dollar, because theoretically this pennant, or you could treat it as the triangle pattern, theoretically it should be the continuation pattern. But we have rock hard resistance on the weekly chart where market stands right now. And that could be some really surprise for others, but not for us, if we will get the downward breakout of this pattern. For us, it will be vice versa. It will be absolutely expected, because we know that this is really strong resistance on the weekly chart. And here you can see some signs of that. First of all, take a look. That is our pattern that we discussed on daily. This is indecision action that holds all further action inside. Take a look what has happened here. Attempt to continue move higher, fast return right back down. So this is really strong resistance area, and we will not be surprised, and market will show the breakout down. In this case, since market will open very close to the weekly pivot point, moving below the weekly pivot support one will confirm that market really has turned to the retracement, and this retracement really could reach as far as 110 area on the weekly chart. That really could happen. That's our ultimate target of this retracement, is 110. But at the same time, market surely could show some tight direction. For example, a market could reach this confluence, 114.50, 114.87. That will be also not small move. But what I would like to say is that we should be ready for the retracement down. And our second thought is that this retracement absolutely will not cancel the possibility for the further action right to the monthly major target is around 119.50. That's our current view on the Canadian dollar. So that's been said, current situation and current price action, price level is not very perfect area where we could think about the taking long, and we think that vice versa we should search possibility for taking to short position, because retracement probably should happen, and this retracement has chances to be really significant.